Hello student, welcome back to IBS. So lecture 2 we will learn about financial reporting related. So let's jump to the topic. So we are going to learn about financial accounting versus accounting or accountancy. So what are the major differences so that it will give you overall idea about the differences between these two things. The focus point of view, financial accounting is a specialized branch of accounting focus on recording, summarizing as we have discussed, and reporting an entity and financial transaction. Okay, and here accounting or accountancy is a broader field. Okay, it encompasses all aspects of financial reporting including financial accounting. So financial accounting come inside the accounting or accountancy. This is the part of the financial accounting. Okay, and in accountancy there is a management accounting, auditing, and tax accounting, all these things. Okay, so it will work for external reporting as well as internal reporting related stuff, and also tax related stuff and audit. And this one, the purpose of financial accounting is for basically for external purpose and internal reporting purposes. Okay, and purpose, if I talk about purpose, is to prepare financial statement like income statement, balance sheet, and cash flow that provide external stockholder with information for their decision making. Okay, the point here is financial accounting are prepared based on accounting. Okay, so financial accounting is dependent on accountancy. However, accountancy is not dependent on financial accountancy. So whatever financial accountancy is doing for external purposes, that is coming from accounting. So accounting is prepared for both the purpose. I would say internal as well as external. Okay. The purpose of accounting is to measure process. Okay. Communicate external and communicate financial information for both internal and external, as I mentioned. Okay, and measure the process in the sense how you are doing account receivable related activity, how you are managing your accounts payable, bank entry, payment entry, expense booking, travel and expense, how you are managing. Okay, how you are managing other accounting and entries and bank reconciliation, like this. For all these things, what are the process you are following, that has to be maintained and measured and documented by accountancy. So based on all this process and procedure, whatever the result will come, based on that financial accounting are prepared. Financial accountancy normally make it more accurate and pass some adjustment and correction entry based on financial statement, based on which date we are preparing, 31st of December or something. Based on this date we pass some adjustment and correction entry. Everything will be updated and represent fair value. Okay, so this is the major purpose of financial account. Okay, and accountancy is kind of regular work, it will keep on going. Okay, financial accounting will stop one place, and from that day it will post all the recurring and pending and remaining entry and make it will show the financial health. Okay, it will show the progress and everything. So this is the major difference. Audience point of view, financial accounting is primarily used for external user such as investor, creditor, regulator, and tax authorities, and this audience is for internal user like management, employee, and external user also. In external user they are investor and creditor. Okay, and if I talk about functional level, it cover a wide range of functions. Okay, including budgeting, cost management, decision support, and performance measurement beyond just financial reporting. Okay, and a standard point of view, it strictly adhere to standardize the rule and guideline like gap. As I told you here, they have to prepare based on particular gap point of view or IFRS, whatever the language of accountancy or financial reporting we are using. Based on that we have to prepare our financial accountancy. So that is why all the adjustment and fair value calculation, depreciation entry been posted, and what method of depreciation entry you are posting, those all things will be come under here. Not only this, also for tax audit purpose, then we also do some changes based on the rule and regulation of taxation. That point also change our normal financial statement to, so they can easily able to evaluate what is our taxable amount exactly, because some of the expenses and some of the revenue normally tax department or tax authority don't allow. So for those kind of thing you have to reverse those kind of entry, but we are reversing for financial reporting purpose. Okay, we are reporting for reversing all this entry for financial reporting purpose, but not for accountancy. For accountancy purpose they may be correct. Okay, we have to keep those things, but for our internal use. Okay, but for tax purpose we have to pass those adjustment entry that will come into your financial reporting, but that will not come in your accountancy. So these are the overall differences, and the key difference is financial accounting is a subset of accounting. Okay, so financial accountancy is the part of your accounting. Okay, focus on external reporting, so his purpose is for external and his purpose is internal discipline. Accountancy is a comprehensive discipline that includes various other branches catering to both internal and external information needs. Okay, so this is the main differences. I hope it is clear to you. So now we are going to learn about financial reporting. So before financial reporting, I would like to talk about few things about financial accountancy and financial reporting. These are almost same, but there is a small differences. Financial accountancy is basically for recording and summarizing a financial transaction. Okay, and financial reporting is basically presentation of financial data, okay, to stockholder. Okay, and financial accountancy focus on recording and maintaining detailed financial record and transaction. Okay, and with regard to financial reporting, focus on presentation and communication of financial information. So these are the differences. If I talk about primary user perspective is this is for internal, okay, for management and your accounting team kind of stuff, and this is for external. And if you talk about scope, it includes even bookkeeping, okay, general entry, R2R related processes, okay, ledger maintenance, okay, account reconciliation kind of stuff, okay. And if you talk about AFR, financial reporting, normally scope is to prepare financial statement, all three or five financial statement, including change in equity share and notes. Okay, so this is the major differences between financial accountancy and financial reporting. Now we will learn about financial reporting process of disclosing financial information. Okay, and financial health. What is the health of the organization? Whether this company is able to sustain, it has good liquidity, has good working capital, it has right return of asset, it has right return on equity, its debt and equity ratio is coming correct as per industry, in which industry they are. So these are the things will represent the health of the organization, okay, to shareholder, okay, shareholder and investor and creditor and management and regulator. Okay, these are the same definition. Process involve preparation and presentation. FR, we know that their main purpose of preparation and presentation of company financial statement, which include income statement, balance sheet, cash flow, and equity shareholder. Okay, plus notes on financial activity, whatever we did with regard to IFRS or US GAAP, whatever the method we are following, based on that we need to provide notes with regard to our contingency planning, with regard to our method of inventory calculation kind of stuff. Okay, and what if you have any provision for long term provision or short term provision, bad debt related provision, those things will come into your notes, so that your shareholder will know based on financial report what are the remaining things which will come into future, either in positive way or in negative way. They can optimize that, they can visualize that how much would be the position in upcoming year based on the notes. Okay, so these are the five major financial statement are prepared by financial reporting. So one more thing we normally prepare, that is called other comprehensive income. Okay, that is actually the difference between income statement and balance sheet. Whatever the thing which we are not able to identify where to place, if you have invested somewhere or you have not earned, or some kind of foreign exchange related stuff, financial instrument related stuff, so those things which you are not able to finalize between these two places, so those things will come into your other comprehensive. Majorly five item will come, that we will learn into this section when we will come here. Okay, so we will be learning about the key element of financial reporting. Okay, The purpose is to provide financial information that is useful for decision making and enable shareholder to access the company performance and financial position. What exactly the financial position is and the changes in financial position over the time between two period. What are the changes has come? What is their position? Changes will be reflected through income statement and cash flow. Okay, income statement will be tell you with regard to revenue how much is the changes and how much is the expenses kind of stuff, and cash flow will tell you about cash inflow and cash outflow related changes, and balance sheet will tell you about the point of the date what is the situation. Or okay, so this is the overall purpose of this financial statement component. If you talk about, we know that income statement, balance sheet, cash flow, and stockholder equity and notes, okay, as we discuss here. And regulatory standard, obviously IFRS and US GAAP, based on these two you need to prepare your financial statement, and other than this you have to prepare based on your local GAAP, whichever country you are. If you are in Netherlands, if you are in Japan, you have to follow your own company financial reporting related regulation. Okay, frequency are normally quarterly and annually. Quarterly normally for those company who are limited in the sense those company who are listed into the stock exchange. Okay, stock exchange, if you are listed, for those only quarterly you have to submit report to financial regulation. Okay, as well as you have to submit your report to even income tax office, as well as your regulatory and whatever the compliances point of view, there you have to submit your quarterly reporting as well as annual. Okay, and but organization also provide interim report like monthly and semi-annually. These are internal, these are not the legal requirement. Okay, transparency and accountancy we have already discussed, so FR will help you to create your financial statement transparent and accountability. Okay, I hope it is clear to you. I think I'm done for the day. Thanks for watching. See you into the next session. Stay tuned. Thank you very much.